So everyone, hi. Believe you are well today, and welcome to the new week. This is the second week for the month of September, and today being on Monday, 8th, 2025. So we get to look at what you're anticipating for the week. So I'm basically going to concentrate on the dollar news, and today and tomorrow it's quite a free day, nothing much in terms of the red folder. On Wednesday, that's when we'll be having the PPI data. So you can see both the PPI and core PPI. They're projecting a reduction from 0.9% to 0.3%. Okay, so but again, it will be very important to wait for the actual so that we can be able to see what transpires. Then on Thursday, we have the CPI data. So we have the core CPI monthly, which is projected to remain the same at 0.3%. We have the CPI monthly, which is projected to increase from 0.2% to 0.3%. Then we have the yearly CPI, which is the most significant here. We are projecting an increment from 2.7% to 2.9%. Then on the same time at 3:30 on Thursday, 3:30 p.m. GMT plus 3, we have the unemployment claims. And then on Friday, we'll be having the prelim, UOM consumer sentiments, and also the UOM inflation expectation. So, in terms of what we saw last week, we saw quite a weak dollar because the NFP data came out a bit way less than the forecasted value at 22K, and that was able to cause the dollar to weaken. And maybe I can start by looking at the dollar index before we look at gold. So if you look at the dollar index, this is I can look at it from the weekly time frame. So from the weekly time frame, we still see the price consolidating within this particular range. That is the weekly range between 98 and that is 98.59 and 97.66. So we still see the dollar index consolidating at that level. That is the level. If I go to the daily time frame, you can see quite precise. So the price has been unable to break below this support level and also above this resistant level. On the 4-hour time frame, still we are witnessing the same thing. So what I'm looking at, as you can see, the last time we did this, I said that in case you're going to have a weak NFP, we are going to see the dollar index pushing on the downside. So I'm still anticipating this kind of sentiments, still looking at some bearish sentiment, but of course we cannot be able to ignore this level, which is a support level, a key support level. So you might see price reject from that level. And now that we have BOS at that particular point, then it means that we might see the price push back again to this level before we see a push on the downside. Or it can even tap the resistant level again, and then now maybe probably higher chances we see more weaker dollar index. But that also will be confirmed in case how the PPI, the CPI, is going to come out, because that is those are the two major data that we are looking at, and also even the UOM inflation expectation is quite significant here for the dollar index, right? So if we look at maybe probably we look at gold. So for gold, what you are seeing here is quite some bullish sentiment from the weekly time frame, no doubt on that. So from the weekly time frame, this is the level that maybe probably in case the price retraces to these levels, all right? So that's where we start seeing a zone. But remember, we have been looking at this bullish peanut, which you are anticipating the price to break on the upside, and it did that. Right now, we are talking about still creating some all-time high. And when we talk about this, I think on Friday we were able, during the NFP live session, I was able to mention the moment we see a weaker NFP data, then we will be looking at the 3,600 level, which it was reached yesterday. Right now, the price is still pushing up. We are still riding on that momentum. So the highest today is 36.17. And there is a likelihood, maybe probably you might be able to see it tap 20, 30, thereabout. Okay, so that is that 620, that six, of course, it's almost at 620. So that 630 levels, because now we'll be working with the psychological levels above on the upper direction. Okay, so on the daily time frame, still looking very bullish. So we have our daily level there, that is the daily bullish engulfing. So in case the price retraces to this level on the daily time frame, we might be able to see some buying opportunities from that particular point. And um, also looking at it from the 4-hour time frame, because these are 4-hour time frame level. So if you look at the 4-hour time frame, this level again is quite significant. The fact that we have the price creator BOS here, right? And now even above that point again, we also have this particular level. Remember, I'm marking these because they are all key buying levels. Here we have another bullish engulfing. After the price pushing up, we see price consolidate here, create a bullish engulfing. So meaning in case you're going to see the price push on the downside to this level, we might anticipate some reaction of prices at that particular point. So the reason why it's quite a good buying opportunity. So for this one, we can mark it like that. So we can reduce that like that. So that will be our buying level. All right, that will be our buying level. So for this other one also, we can reduce it to that where we have that engulfing. That is from the 1-hour time frame. So this will be a buying level. Having given us a break of structure there. So meaning that now in case the price pushes down to this particular point, let's even mark it for now as an order block. So this is the order block. So we might be able to see maybe price come to this level and then now giving us a buying opportunity. But in case the price is going to break below this particular point, then we'll be looking for a retest, and then now the price pushing on the downside. Of course, now coming to this particular level, because here it's another key level. And why this level is a key level is, like I said, here we have another BOS at that particular point. And where did the price originated from? It had originated from this particular point. So now when you go to even the 30 minutes time frame, you can see the same level on the 15 minutes time frame. You can see now it's the same level, the full body here of the candlestick, right? So being quite a big level here. So if you look at the risk level here, we are talking about 200 pips, okay? So these are the levels that now maybe probably you want to go to, like the 5 minutes time frame, and you try to align them, because now if you come to the 5 minutes time frame, we still see no potential. The risk is quite a bit big. So sometimes it's good to maybe probably not, when I have that kind of situation, what I usually look at is the mean threshold. So maybe probably from the mean threshold, down here again, you see it's quite a bit high risk level. So two things: you either don't take the trade because it doesn't meet your risk management criteria, or you maybe probably lower your risk, because anytime we have high risk, I mean, anytime we have a high or a big stop loss level, then we anticipate the best thing is to lower the lot size completely so that you can be able to minimize the risk. So those are the two ways that you can be able to approach that kind of price action. Okay, so that's what we'll be looking at. Here we have a minor zone here. We have a minor zone here. So this is a zone also that is likely to create some buying momentum here. All right, and remember how I do it myself. I usually look at a setup that is likely, it's potentially to give me like 100 pips, and the moment I'm 50 pips in profit, I usually break even and take partial profits. Okay, so if you look at this level, if you look at even these highs here, I'm trying to look at these highs here on the left, and you see it's actually about 100 pips. So these are level that can be able to give us a trading setup. Okay, so buying opportunities, right? So how I am positioning myself for gold is that since we are very bullish, so any push on the downside, I'll be looking at buying opportunities. Oh, these are the levels that we have been marking. The price has been failing to come to this point because you have been very bullish. You can see all these buying points. So they still suffice, right? All those buying points, they still suffice, as you can see them. And the nearest, now we work with the nearest one, which is here. If that one doesn't hold, then we'll be seeing the price coming here, or maybe potentially here, and then I will be looking at some buying conditions. So remember, we have CPI, we have PPI, we have UOM inflation expectations, and also UOM consumer sentiments. So those are the dollar news that we have. And we say that the dollar news, when you look at the PPI, they are projecting a decrease, meaning maybe probably a weaker dollar. If you look at the CPI, they're projecting an increase, meaning maybe probably a strong dollar. But all the same, it's good we wait for the actual data so that now we can be able to you can be able to see where the price is likely to go next, so that you can make informed decision guided by the data that we have. Okay, so for now, as we stand, we stand at higher chances of a rate cut come September 16, 17, the meeting. But again, the Fed is not still off yet the hook, because we still have the PPI data, we still have the CPI data, both of them, they're inflationary data, and also the Friday's data, which is the UM prelim inflation expectation. It's quite a key data that the Fed usually look at in terms of making decisions. So in case maybe probably you're going to see a weaker PPI, a weaker CPI, what it means is that maybe it might cement a likelihood of having at least two rate cuts of 25 basis point by the end of these by the end of 2025. Okay, so but let's watch that closely and see how things are going to transpire. So with that, I wish you a fruitful week ahead. Remember to be focused, remember to be disciplined, and always to trade with purpose.